Hey, what's up, everybody? Cowboy. It is our customary 8:30 a.m. EST time, and let's go ahead and jump right into it. I'm going to go ahead and share the screen, bring up the economic data, and see what there is to see this morning. Give me just a moment here. Wrong button. I pushed the wrong button. Okay, there we are. All right. So Friday the 28th, Canadian news plus core PCE index. So that just happened right now, the core PCE index. So let's go ahead and jump right into the chart and see. I think the best place to look for that is the euro, right? Either that or the Dixie, but I like the euro because the Dixie's not really tradable for everybody. So I like to look at action, places where you can take action. And the euro is the most traded pair in Forex, the euro versus the dollar. Looks like my little trade from yesterday. Yeah, I did. I took this trade off for the private live lab folks. They all saw me take a micro profit in it and look for a better entry. This would have stopped out had I stayed in the trade. And it looks like the best entry would have been around 11:30 last night, but I didn't take any trades because of the data coming out this morning. This is an inflation metric that came out this morning, and as a matter of fact, the core PCE data is going to be the data that the Federal Reserve prefers when it comes to inflation, and it does seem, for some reason, to be less impactful than the CPI. Even though it's what the Fed prefers, and it's what supposedly will affect the prime rate more. But hey, man, you know what? It doesn't have to make sense, does it? Right? It's all about what actually happens rather than what we think should happen. So let's go ahead and see here. Nice little candle spike here. Looks like kind of an even candle, a little bit more bullish than anything. So I would say that it was dollar week data, which is good for markets. Let's see here. It was just within range. It was right as expected. So what this tells me is that the PCE came out at 0.1% month over month. That means that the inflation month over month was 0.1%. And with that being the case, that means that that's exactly what was expected, and it means that likely the market was going to go up anyway, but money was waiting on the sidelines. And as soon as that data got announced, the market went up. And even before it went up, it actually spiked down a bit. If you look here, you look at this 5-minute candle, price actually dipped down a fair amount and then pressed upwards. So a lot of people who were expecting price to go up, they probably went long and they got knocked out of their trades. And a good way to look at this is on the 1-minute chart. And you can see right here on the 1-minute chart, it actually whipsawed. So at some point it went low, at some point it went high, but really not a lot is going on here. It's only let's see, that first candle is from 19 to, what is that, 98. Okay, that's a decent, 22 pip candle. And I'd have to actually dig down to a deeper chart to see which way it went first. But definitely people who went long may have been knocked out of their trades if they had a super tight stop. It's just what I'm trying to demonstrate here is that I often do not trade news because of the chicanery that goes on with these candles, right? With the price being pushed around like that, anybody going in any direction trade probably gets knocked out of it unless you are extremely quick and in a low latency scenario. Right. So what I mean by that is that if you have the kind of connection where your computers can communicate back and forth very quickly, then yes, you could be very nimble and catch a move on these. Or if you just are really good at setting limit orders, just set limit orders for orders that will automatically, go off, automatically fill without you having to press a button. That's the ideal scenario, but then it's harder to actually adapt to the trade. So again, just another reason why I avoid trading news most of the time. But it does appear that whatever's going to happen with this trade has happened. Whatever's going to happen with this announcement has happened. So we can move on and we can start to take a look at the rest of the market. So excuse me while I form up this crazy looking page right here, this really crazy looking chart. And we'll bring up Bitcoin and we'll go ahead and make this all make some more sense. Okay. So here we are on the daily chart for Bitcoin. And it looks like my okay, there we go. Some of the data took a minute to populate. Remember what I said about Bitcoin? The most likely path in my mind was for price to play around down here in this area for a while and then pop up. And certainly that has. I drew this a few days ago, right? And I drew this in a way that was just to demonstrate not exactly how I thought price would go, but how I would play along, where price would play around and then whenever it broke above this high right here, right? So let me zoom in a bit. Whenever price broke above this high right here, that's when I would be interested in taking along. And I want to see it break above this high, and it has not yet done that. So what that means is that price may very well continue to pop around, right? It might continue to range in this area for a time until it breaks above that. And it may not break above that, it may break below that. As of now, right, I do think price will head up, but it may not. It may grab liquidity down again and make a double bottom at this 59,000. It could even grab liquidity down at 55 and a half or 56 and a half and make a high time frame double bottom with this low right there. It's very possible, but I think either way, whether it dives down for these lower liquidities or not, there's a good chance it's going to head up. And there's a really good chance it's just going to do something along the lines of what I just drew, where price will simply flop around down at the bottom of this high time frame range that we've been seeing price, back and forth for how long? Going back to March. We're now, let me see, March. So what is that? April, May, June, July. So 4 months, going on 4 months. It's a long consolidation. Now, the great thing about these long consolidations is that the longer the consolidation, the more powerful the breakout, right? And we've seen this before. So if you go back to, let me zoom out here to demonstrate this a little bit more readily here with less noise on the chart. And go to the weekly. And we'll dump this here. Okay. So if we look at this range, this is really one long range right there. And then another one here. You could also almost combine these two, right? And price ranged from summer of 2022 until October of 2023. So you're looking at it like a year and a quarter. And the movement after that was completely massive. The movement after this was the move up. It only took from October 2023 to March of 24. It's about a 5-month period. But in that 5 months, price went up, let's see, from 31,000 all the way up to 71,000. I mean, that's times 1.3. It's huge. That's really big. Times 2.3. So 230%. And that for Bitcoin at this stage of the game is pretty big. And it actually bottomed out at 15,000. So if you count from the bottom to the top, 15 to 70, that's going to be 400-ish percent. Let me see. Yeah, 381% really from bottom to top. But the breakout itself was 230%, and that happened in a very short period. So, so that's what we're looking at here, right? So we can just, there's a way to, yeah, all right, forget that. So anyway, that's what we're looking at, and I'm kind of sticking by this. Price just rotates around the bottom of this range for a while and eventually makes its way up. That's what I'm looking at. So let's go ahead and look at the time here. I'm going to go ahead and take a quick look at Ethereum. Ethereum has been the talk of the town because of the SEC has been backing off of Ethereum. We'll take a quick look at this before we move over to the private live lab. Let me go ahead and set that up here. Now, the SEC has backed off. They were investigating Ethereum And now they're done doing that, right? Supposedly. So I went ahead and made like just what I thought might happen with an Ethereum trade, and it is again going to be dependent on Bitcoin staying above 60,000. Basically, Bitcoin's going to have to not dip down too far. I think a dip down to 59 might be okay. That kind of high 58s, 58.9, 58.8. If that happens, I think this trade will still stick around. But it does look like this. Had I entered a trade right here, I'd still be in it. If Bitcoin, I didn't enter this trade, by the way. There just wasn't enough R for me. I mean, it's technically enough R. 1.29 to 1 is acceptable for me. I can risk $1,000 to make 1,200, but in this case, or risk $100 to make 120, whatever your math is. But if that dip happens down to 59,000, I'm suspecting price might dive down and give me a nicer entry. So what I may do, depending on how things shape up in the algos, just going to take a look at Bitcoin. And if Bitcoin starts to really firm up, I might enter this trade, have this deeper stop, and then have a second entry waiting closer to this liquidity zone, and then have that deeper stop. I may take that. That's an opportunity. It's within my risk tolerance. But again, Bitcoin must form up on the algos. So I'm going to go ahead and take a look at the Bitcoin algos here, but I'm going to do it in the private live lab. We're going to assess this further. But for now, I just want to remind everybody, take a look at this QR code. Zap the QR code on the top right-hand side of the screen. And that's going to take you to our website. What we do is we teach people how to trade. And as far as algos are concerned, we're not talking about coding necessarily. I mean, we can put you on the path to coding your own algos. That's completely something we can help you do. It's really ideal if you can have something trading for you while you're not actually sitting at the computer, right? Just flip on a switch, trades for you. It's not quite as simple as that, but in a way, it is able to capture a lot of gains that you might not otherwise capture. So that kind of trading is super ideal. But in the meantime, that is going to take some time and money. And the way to make that money, because money is time, and the way to do that, in my opinion, is to go ahead and trade and build a trading plan, right? That is a manual, old school trading plan, and then convert that into an algo further down the road. And we teach you to do all that stuff over in Algo Factory. And the largest driver for your success is your work ethic. The more successful people are the ones who stick with it and they just continue to work and work and work. So go ahead and do that. Don't forget Algo Factory, trade your job, upgrade your life. And last but not least,
join us or die.